Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles.
Let's get to your top stories today. Stocks across the Asia Pacific down as investors start pulling back on this AI frenzy. The yen's rallies continuing this Thursday morning in the Asia Pacific as global carry trades are continuing to unwind. Now, China's interest rate cuts are failing to reverse the stock slump, with the mainland benchmark on track for its worst week since Feb. Also ahead here on the show, Typhoon Gaemi heads for China after tearing across the Philippines and Taiwan, with Taipei trading suspended yet again. And President Biden says he's passing the torch to a new generation, addressing Americans after dropping his re-election bid.
Well, it is a sell-off that has gone global now. You take a look at how chips are doing. Well, not just the chips, but really stocks in general, really been dragged down by some of these chip stocks here. And really this whole rethink of what this AI play is about, given what we saw with the disappointment in earnings when it comes to some of the Mag 7 so far. So we saw that big drop in Tesla, Amazon on the Wall Street session that really dragged U.S. stocks to the worst day since December of 2022. We're feeling it certainly here in Asia today. Take a look at how the Kospi is doing. We're down, seeing about 2% losses in Japan as well. And of course, Taiwan, keep in mind, still out of this sort of session here today. They are shut for a second day because of Typhoon Gaemi. We did get the news from the stock exchange in the Philippines. They will be resuming operations when it comes to the stock market, but FX and bonds will still be shut here today. But key to watch is not just the chips plays, but also what we've been seeing in the FX markets. Dollar yen, we're now talking about a 153 level for that currency. We're back to the levels that we saw in May. We talked about this unwound of the carry trade. We've basically gone from 157 to 153 in a matter of just 4 days. A lot anticipation of what's going to happen with the BOJ next week. We're watching, of course, that yield curve as well. Seems to be still steeper here. You take a look at what we've been seeing with the 2-year yield. It seems like Bill Dudley really moved that market too. He says, look, I've changed my mind. The Fed needs to cut next week. Now, he says, given the that slowness in the economy that he is foreseeing here. So we're watching that very closely. Overall, we're seeing, when it comes to commodity markets, or continue to see a bit of a free fall. Iron ore is down about 1% once again. Flip the boards. We talked about really what it was, the chip plays, and why we're seeing SK Hynix down some 7%. The earnings were actually good. They doubled the revenue when it comes to the AI boom, but we're caught in this cross current of this tech sell-off that we're seeing in the U.S., and that's why it's dragging down most of these semiconductor stocks down. Renesas in Japan down double digits, about 11% here right now. And it's not going to be a good story when it comes to China either. After yesterday, we basically saw the biggest sort of loss that we've seen in 3 days, 3% or so. That's the most we've seen since January. So we're in a bit of a slump for Chinese stocks as well. And take a look at the CSI 300 for one thing, Dave. We basically are off about 10% of back then, about a year ago, that July Politburo meeting. That's when they started talking about boosting markets, and we saw new regulators and everything. But we're back to those levels now.
Yeah, so 3401, to your point, is the level we're watching now on the CSI 300 today. So suffice to say, this sell-off likely continues when these markets open up, particularly in Hong Kong, given the sort of correlations there. Now, 3401 is a level where we're tracking on the CSI today. So that was the low, or that was the close we hit back on July 8th, so about 2.5 weeks ago. Below that, we're back to levels of Feb. So this is like a 5-month low as far as this is concerned. As far as data is concerned, not that this is going to have any sort of bearing materially on equity market today, but just keep an eye on this health of the economy. Of course, trade numbers come out of Hong Kong later today. And of course, Typhoon Gaemi is headed towards mainland China. And of course, we'll sort of unpack really what we've seen so far out of Taiwan and also out of the Philippines a bit later on in the show. But for today, it's really all about this stock sell-off, the chip sell-off, and of course, the strength we're seeing in the Japanese currency as we speak. There we go.
For more on markets, let's bring in our MLI strategist, Mark Cranfield. Let's watching all things. Let's get to maybe just what stocks are doing here right now. The fact that, we're starting to see maybe some of these AI stories is not really so much, generating revenue, but really still becoming a cost for a lot of these companies among the Mag 7. It seems like we've hit a bit of reality check right now. Does that mean more pain to come, Mark?
We're into risk management territory now. So what you're seeing here is basically indiscriminate selling in equities and in other trades which have been doing well over the past few weeks. So now we're in the shock to people that these mega cap stocks in the United States maybe had gone too far. They need to unwind some of the froth which have been built up in those markets. That will spread across people's thinking to a whole range of things. So in the very short term, you can forget about rotation trades because people are just trying to reduce risk. And what we've seen many times in the past is that when you're in that kind of mode, you just sell first and ask questions later. It's going to be pretty indiscriminate across equities, commodities, currency trades, which for a long time we got used to carry trades being a good way to buffer your portfolio. Well, they're going to go out the window for a while as well. And people will be looking for one or two haven places. So the very short end of the Treasury curve, Bill Dudley gave it some help, as you noticed there. But certainly what also adds to the concern for people is that we're fairly early in the earnings cycle here. We still haven't had Apple, Microsoft, Meta, and Nvidia is still a month away. So in terms of are people going to get worried about what's to come down the pipeline from some of these major companies, it's still a couple of weeks to go yet. So this mood will be pretty hard to snap unless there's some very pleasant news coming. If the Fed surprises with a July rate cut, that would obviously help. But right now the mood is pretty bad, and it isn't going to get any better in the short term.
Mark, do you expect the sell-off and the downward pressure to continue well into the into the opening bell, of course, when Hong Kong and China open up today?
It'd be very surprising if we don't see a really severe day all across Asia. 2% minimum downside is very likely. We're going to probably see the same spill over into Europe as well. Of course, the Chinese so-called home team may well be in there trying to defend onshore equities. There's not too much they can do about 8 shares on the Hang Seng Index. If they're going to have a bad day, it's going to happen anyway. The momentum is going to be very, very strong. You can see already from what's happening in Tokyo, what's happening in Korea. There's not going to be much respite in the near term for those things. It started in the US. It's a NASDAQ tech AI related story until we see some stability from the big stocks in the United States. There's not going to be much of a positive read across for the rest of the world.
You mentioned forget about carry trades for now. I mean, can you walk us through? I mean, the moves that we see in the yen we talked about yesterday, but are we likely to see more upside from yen is one thing, and is this really the end of this sort of carry trade strategy?
The big answer to that depends very much on the Bank of Japan and them coming through. But one of the differences that we're seeing as we lead into next week's meeting is that the media reports which have been coming out in advance, before every Bank of Japan meeting, traders are used to seeing all these leaked stories. This time round, the stories are relatively hawkish. It sounds as though there is a consensus within the Bank of Japan forming that they're ready to hike rates again next week and probably to reduce bond purchases by quite a large amount. Now, that was what people were expecting in June, and of course it didn't happen. There was a lot of disappointment. That's why dollar yen went to 162, and that rebuilt some of these carry trades. Here we are now coming into this meeting, and people are much more convinced that the Bank of Japan will act, and that's why you're seeing a rapid unwinding of these trades, because the yen, the short positioning against the currency was severe. It was getting bigger and bigger, and it's finally beginning to snap. And it's not just dollar yen. If you look at a whole range against the euro, against the Aussie, against the pound, there are a whole load of carry trades put on with the yen as being the funding currency. All of those need to be unwound. Now, the Bank of Japan still has to deliver. If they don't, of course, some of it will come back on the table. But if we do get the follow through where it's a hawkish BOJ meeting, there could be even more downside for dollar yen. We quite possible will go below 150.
Mark Cranfield there, just lining up what appears to be, as to Mark's point, a nasty session today. In Singapore first, Asia's off 1.2%, Japan is 2.5% to the downside, and futures are pointing lower ahead of this Chinese market open 20 minutes away. Right, just ahead here, President Biden about an hour back speaking from the Oval Office, addressing effectively to explain why he dropped out of the race, laying out his goals for the remainder of his term. Analysis with the University of Sydney just ahead, counting down to the open of trade in Shanghai and Shenzhen. And here In Hong Kong, as you can see, futures are in the red. This is the China show.
I believe my record as president, my leadership in the world, my vision for America's future, all merited a second term. But nothing can come in the way of saving our democracy. That includes personal ambition. So I've decided the best way forward is to pass the torch to a new generation.
That was President Biden speaking about an hour back at the Oval Office and effectively also lining out and explaining why he did drop out of the race. For more on that speech and all the other events, of course, in news out of Washington, it's been a busy 12 hours or so. Vonnie Quinn is with us right now. Vonnie, let's start with the speech. Pass the torch to a younger generation, according to the president.
Yeah, when you think about it, it was actually quite a clever speech because he didn't actually make it that it was a health concern that caused him to step down. He talked about it being really just a response to the need for democracy and the need to pass the baton to a younger generation. So in that way, he sort of batted back some of the Republican attacks on Kamala Harris that have been coming through already, right? That she facilitated a president that maybe shouldn't be sitting in office by not saying anything in advance. That was one of the attacks. And he really just put the spotlight on democracy and the defense of democracy. He said the great thing about America is here. Kings and dictators do not rule. The people do. The power is in your hands. There wasn't a whole lot of legacy talk. He definitely mentioned some of the economic attributes that have characterized his term and so on. But, you know, he does have 6 more months to go. And I think he wanted to keep the focus on the fact that there is more work to do, or at least he would like there to be work done in the next 6 months. And he did, of course, mention some of the areas that he would like to concentrate on, including ending the war in Gaza, bringing home all American hostages around the world. The cancer moonshot was another thing that he mentioned. And he did put the spotlight a little bit on his record, including how he had narrowed the racial wealth gap and he had, allowed the U.S. economy to grow in a more equal way, for example. And
coincidentally, this is the time when we've heard from the Prime Minister Benjamin Netanyahu that made this pretty defiant speech in Congress as well. What more do we hear from the Israeli Prime Minister?
It was a really interesting time for Netanyahu to be in Washington, of course, Yvonne, because there was a lot of rhetoric and a lot of protest, right? A heightened security presence in Washington, D.C. for this speech to both houses of Congress. Now, Kamala Harris wasn't there. She was on the campaign trail. She's in Houston this evening, but she will be meeting with Netanyahu tomorrow, as will President Biden separately. And we know that he's meeting with Donald Trump on Friday. A lot of Democrats in particular were not in attendance. And of course, some of what happens next year will be dependent on who actually takes the White House. We don't quite know how Kamala Harris or Donald Trump would treat Netanyahu were the war on Gaza to continue into 2025. We know that Kamala Harris's rhetoric has been a lot stronger than President Biden's, for example, on the humanitarian crisis in Gaza. We also know that Donald Trump is bearing a little bit of a grudge because Netanyahu congratulated Biden on winning, and Donald Trump hasn't quite forgiven him for that and for also pulling out of an operation that was to be done with Israelis on an Iranian commander. So there's a lot of question marks, but you can be sure that there'll be a lot of conversation between now and when Netanyahu leaves to go back to Israel.
Vonnie, thank you, Vonnie Quinn there, our Bloomberg TV anchor, joining us out of D.C. this evening. Let's get a little bit more analysis now. Brendon O'Connor is a professor of politics and foreign relations at Sydney University's U.S. Studies Center. Professor, it's great to have you on. As Vonnie mentioned, the president, came off as pretty, I guess you could say, almost a bit sad, a bit, in his voice, it was a bit cracking at times, and really talking a bit more, it's time for new voices. And yes, he said even younger voices to kind of take the baton. What's the next 6 months going to be like for Biden here as he tries to secure his legacy?
Well, as you say, it was a rather whispering voice, still someone who seemed like they were suffering from the after effects of COVID. His aging issue he didn't address, but I think it's obvious for all of us that he is not the candidate he was, say, 4 years ago when he ran against Donald Trump. I think he's done the right thing by moving aside eventually for Kamala Harris, looking like to be the Democrats' candidate against Donald Trump. He made a very strong emphasis on America being at a precipice of the end of America as a democracy. A very big statement. I think a statement that is quite justified in the case of Donald Trump, that this is one of the few elections where things are pivotal, things could change in very dramatic directions. He's been making that point for the last 3 years. He made it in the previous campaign, but I think with the sense of after January 6, 2001, he had the sense that Donald Trump was more of a threat than even people imagined because of the claims of a stolen election. So not a brilliant speech, but a speech that gave you a sense of where Biden is at the moment, a speech from the heart, and a speech where he makes a very dramatic pitch to why this is such an important election.
Yeah, I mean, to your point, Professor, the election might be a vote in approval of Biden expressed through Harris. And as a follow-up to Yvonne's question, what do you think the rest of his term needs to look like in order to boost the chances of Kamala Harris?
Well, both Harris and Biden need to put forward the idea that there's been a massive recovery of the United States economy, that employment has really bounced back, that growth has bounced back. Sure, there's been some inflation, which makes it hard for people on low incomes to pay the bills, but Biden will, I think, have to make sure he's out there meeting foreign leaders. Netanyahu, obviously, is going to be a meeting this week, showing that he's vital, that he's not entirely sort of lame duck president, but it does allow Harris to split the role to some extent. The vice president, you're never sure what their responsibilities are. For her to campaign strongly, for Biden to focus on trying to address some of these remaining issues, like reducing the number of people coming across the southern border of the United States. So in some ways, we get this situation quite regularly. When a president is serving their second term, they can focus on governing and the new person steps forward to run as the candidate. So Americans are familiar with this process. I just think Biden is going to have to definitely up his game. He's going to be under less pressure. He's not going to be in the spotlight the way he has since that terrible performance in the presidential debate. But Harris will need Biden in some ways to continue to be a stronger voice for really a team. You know, they'll be linked together in voters' minds. And so Biden will need to reassure people.
You mentioned less of a spotlight on Biden, and essentially he is going to be a lame duck president in some ways, Professor. I'm just wondering, what does that mean to the world? I mean, does that give him less leverage in the foreign stage? And will, you know, the U.S. adversaries like Russia, like China, would they likely take advantage of that?
I don't think so. I think Biden is a pretty seasoned campaigner on foreign policy issues. So with Russia and China, I think we can see a continuation of U.S. policy. I think where it's most tricky is with Israel. As you mentioned before, Kamala Harris has rightly talked about the humanitarian crisis in Gaza. Nearly 40,000 people have been killed, a really humanitarian tragedy. Biden much more is linked, I think, to the state of Israel, although his relationship with Netanyahu has never been positive and rather strained. He has stood very closely with Israel throughout this war. So if there's a differentiation between the two candidates, and there's a lot of politics at stake here, a lot of younger voters are very unimpressed by what Biden's position has been on Israel in the Gaza crisis. Harris, I think, has tried to finesse that a little bit and say, look, I understand why people have grave concerns about Israeli behavior. So any kind of tension between the two of them, any differentiation of opinion is going to be, I think, something the media will play on. But I think Harris has to not worry about that. She has to cast herself as a candidate who makes decisions in the future and talk about what she truly believes rather than trying to preserve Biden's legacy on that particularly thorny issue.
So let's unpack that further and also throw Trump in. So do you effectively see Kamala Harris pulling back support for Israel? And how does that look like if it is Trump that takes the White House in November?
Yes, I think Harris will distance herself a little bit from Biden's policies. I think we've seen that in some of her comments about wanting food to get through more effectively. But this election could come down to Michigan. Michigan could be the key state, and whoever wins that, Pennsylvania, Wisconsin is likely to win this election. And Michigan is pretty large Arab American population, a lot of students who are probably registered in that state to go to university, who've been unimpressed, those two groups, by Biden's position. I think Harris and Biden himself was moving in this direction, was wanting to put a bit more distance between the Netanyahu government and the American government. As for Trump, a wild card in this regard, I mean, has said some pretty cavalier things about the Israelis needing to finish the job in Gaza. What that might mean after 40,000 people are already dead is sort of boggles the mind in its lack of humanitarian thoughtfulness. But Trump is like that. He'll talk tough, be very sort of scant on detail, and that in some ways would give the Israelis a freer hand, I think, a Trump administration. But two big egos, Benjamin Netanyahu and Donald Trump, and Netanyahu has a history of clashing with Obama, with Bill Clinton, and it wouldn't be surprising if there was a personality clash with Donald Trump.
Professor, thank you so much for your time. Brendon O'Connor there, professor of U.S. politics, U.S. foreign relations at the United States Studies Center at the University of Sydney. Breaking news right now, another rate cut coming out of China. One-year lending rate effectively down 20 basis points. We're coming off 2.5%. We're now at 2.3%. We're looking at no reaction so far in the Chinese currency going into the open today. 6 minutes away, we are poised for a lower open. This is the China Show. Good morning. Welcome back to watching the China Show. To recap breaking news, so on top of, in addition to the rate cut we got on Monday, there's another one on deck today. The PBOC cutting the one-year MLF rate to 2.3%. That's a 20 basis point move, of course, and it's also a net injection of 200B. There was nothing maturing today, so effectively that's more money into the system at a lower rate.
Yep, in terms of your free market, this is what we're looking at in Hong Kong right now. We continue to see this global equity rally, reversed quite a bit here in terms of what we're seeing in tech. MSCI China falling below that 200-day moving average as well. The open is next. Welcome back. You're watching the China Show. We're counting down the open of markets. And yeah, we can't really catch a break here today. Take a look at how things are going in the Hong Kong free market. We're slightly lower, but we're seeing much bigger declines, mind you, likes of Japan, Korea here today, just given this tech sell-off, the chips declines, and really that continues here for another day as well. We mentioned about Taiwan is still closed for a second day because of Typhoon Gaemi, but Philippines opens in just a couple of seconds here. We're talking about the stock market, of course, FX and bonds are still suspended for today, Dave. Yeah, that's probably going to see a drop there. Catch down yesterday plus the risk aversion we're seeing today. I mean, to Yvonne's point in the chip space, right? Some of these names are down 10, 11% over in Japan. In case you missed it, also breaking news out of China, the PBOC delivering another rate cut a couple of minutes back. The one-year MLF rate is now down 20. We're down to 2.3, net injection of 200 billion. CSI 300 coming online, 0.4 of 1%. So 34.01 is the level you want to watch in this. So we're just 4 points above that, below which we're back to levels of last Feb. Right. Nikkei 225, as you can see, is also bottom of your screen. It's a reminder of just how bad things are across the region so far. Hong Kong, let's flip the boards, please. On this specific case, MSCI China has opened below your 200-day moving average, I think for the first time in, I would say, 6 weeks. So we're effectively at April lows on Hang Seng and MSCI China, 0.4 of 1%. Tech, as you can see, is feeling the pinch. Tencent is down about 1%. Not to also mention, so on the back story in China and rates, deposit rates are being cut across the major and the mega banks there. So I think Bank of China joining that chorus there, reducing their deposit rates. Just very quickly, a glance at some of the movers here. So chips to SMIC, of course, and some of the names that have been sold off of late. Nongfu Spring, Chow Tai Fook really took a big hit yesterday. And also overnight, just take your pick, right? Nikkei, NEO is actually down substantially in the U.S. session. We're seeing that play out, 1.3%. But yeah, it's all things macro. It's a really bad day to be long these markets. Yeah, let's bring in Jason Loy, head of APAC Equity and Derivative Strategy at BNP Paribas. I wanted to start on China, but I think we have to talk more about what's going on here in the region. It seems like what we're seeing out of this tech rotation is really becoming more fierce and pronounced now. How much more downside do you think we could see?
I think at this point, you're right that we've seen a very dramatic position rotation, and it all started back in the CPI print a couple of weeks ago, where the overall interest rate expectation in the U.S. has changed dramatically. Because previously, I think the tech and semiconductor in particular has been this kind of core position for a lot of people because of that interest rate situation. And now, all of a sudden, when you have a rapid shift in the macro sentiment, a lot of these popular positions has to be unwound. So I think until we see some confirmation from some of the heavy semiconductor bellwethers, perhaps there's still a little bit more volatility given how crowded those positions has been. And as you pointed out earlier, we've seen some of that happening in Asia as well. So we may have to wait until Taiwan reopen after the typhoon to have a full assessment on the broader semiconductor sentiment in the region.
So the advice would be, if I'm tempted to buy this dip, whether that's in Asia or in the U.S. later today, don't do it?
I think at this point, we may need to see a little bit more of that positioning unwind before you can establish the bottom, given how crowded some of those semiconductor positions has been, not just for Asia, but globally as a whole.
China seems to be trapped in a down cycle as well. I mean, anytime we see some sort of rebound, it only lasts a couple of weeks as well. What's still needed to avoid this sort of downward spiral that we're seeing now?
Sure. I think there are two parts to that question. On the index level and on the thematic level, you are correct that when it comes to the index level, we have been experiencing this super concentrated, super volatile roller coaster ride for quite a few times this year already. The main cause is because those rallies are all driven by valuation of the hope that you will see more stimulus measures. But over the past of 6 months, the earnings estimate has continued to be revised down, which means that these kind of rally must be supported eventually by fundamentals, and yet we haven't seen that coming through. So that's why at some point investors ran out of patience and say, I haven't seen any improvement in earnings, therefore I need to get out of that index position. On the sector level, we continue to see very wide divergence when it comes to sectors actually benefiting from the global trend versus the sectors that are suffering from some of the consumption depression in the market. So I think for a stock picker market, it's actually still quite appealing for them.
So favorite sector in China right now, where do you have the most, whether that's earnings visibility or the best momentum at the moment, relatively?
Sure. I think there are three interesting segments that we're looking at. You touched on the first one earlier. This is the high dividend yielding sectors. We know that mainland investors have been buying Hong Kong listed market at an accelerated pace for the past 3-4 months.
Yes.
And that's largely due to the fact that Hong Kong stocks offer very strong dividend. And the fact that some of the banks are cutting the deposit rate, which means that they can protect the net interest margin, in theory will give investors a little bit more confidence about their ability to pay dividend. And also, some of the banks actually now changing the dividend policy from annual dividend into semi-annual dividends, which means that there's a little bit more reason for people to hold on to these stocks for longer, because now you're getting cash flow on a more regular basis. The other two themes has to do with what is being mentioned at the third plenum, the first one being the electricity reform. We know that AI is a very important topic.
Interesting.
But very often that AI also comes with much higher electricity consumption, which is one part that we're seeing a lot. And by extension, the so-called hard and core tech that is also get a lot of mention in the third plenum, which we believe there will be more support measures on the way.
SOEs, though, I mean, the dividend trade is faltered a little bit recently. Can we actually look at some of these SOEs, whether it's banks, these coal producers, oil companies, can they actually be seen as havens? Because the macro backdrop is still quite weak right now.
Yeah, I think that's a fair question in terms of how much outperformance they have already produced. But if you look at the other investment thesis, to our point earlier, if there's no immediate support on the consumption side, I think the investor will still look for defensive nature and look for more the stability and certainty. And in this sense, some of the SOE companies with high dividend yield does offer you that level of comfort, especially if they can maintain those dividend yield at a relatively high level. And the dividend theme itself is also prominently featured in the third plenum as well. So we expect more of these capital market reforms to come for the rest of the year.
I mean, China just cut rates again today. They cut rates on Monday. Does the rate differential matter? How much does that feature in your conversations, that things are so low in China, that money is coming to really where you have an interest rate, which is Hong Kong? And I'm wondering whether that's keeping the Asia market at bay.
I think the interest rate issue happens when it comes to some of these so-called long-term money. So in the past, when you have pension funds and insurance companies, they were able to achieve 4 to 5% long-term return because of the bond yield back then was quite high.
Right.
But nowadays, to your point, the whole curve has shifted down.
Yeah.
And so all of a sudden, their ability to meet these long-term objectives are greatly challenged. And then all of a sudden, when they look around and say, hey, look at the equity market, all of a sudden, you're able to identify 10, 20, 30 high-quality stocks that are paying 6, 7, 8% dividend. It becomes a very interesting kind of value proposition when it comes to achieving your long-term investment goals.
Morgan Stanley had an interesting note today just saying, it's still a bit too early to declare maybe the bottoming of the earnings growth. You mentioned that's still key for this equity market to actually recover. Do you see any signs that we're getting to that floor in terms of earnings growth? And maybe we'll start to see some upgrades.
I think that earnings revision is quite a lot of dispersion across different sub-indices. So if you look at the more direct consumer-facing ones, especially consumer discretionary, consumer staples, I think they're still under that downward pressure, partly because of the so-called consumption downgrade and the deflationary pressure onshore. But if you look at the one that's a little bit more geared towards internet, towards media, towards the more kind of new consumption, we have seen the earning estimates on indices like HS Tech being revised up throughout the year. So I think that's the part where investor will become a lot more selective when it comes to deploying the capital.
Politburo meeting. We've seen signs this week that maybe they would be announcing something a bit more pro-growth. I mean, with the rate cuts coming, so I'm just reading and I'm implying maybe that they might do something. Should we have our expectations notch up a little bit going into that?
I think that's a fair question because when you look at the readout of the third plenum, it's still clear to us that the policymakers wants to achieve the official 5% growth target. And based on the latest Q2 GDP number that we received, it feels like if they don't do any additional measure, it may be difficult to meet the official target. So this week we have the OMO cut, and then you just mentioned about the MLF cut. We understand that the July Politburo meeting, historically, it's an evaluation of the first half economic results. And so there is a chance that they may provide a little bit more visibility in terms of what other support measures were to come in the near term.
This week it was about, post-plenum, we saw basically signs of these ETF flows really shrinking here. What are you tracking in terms of whether this national team is really stepping in and helping or not? And is that something that's really needed for this sort of market to continue to support itself?
I think that's a very excellent question because this year, one thing that we start to pay a lot more attention is the daily turnover and the daily fund flow on these onshore China ETF because ever since the central Huijing made that announcement, I think that's something we are tracking. So we are not able to tell you real time what they're doing because they never disclose on a daily basis. But by watching these ETF fund flow, what is interesting to us is that the ETF fund flow is actually quite tactical, meaning that unlike the BOJ where they're buying every day, they're actually picking the spots. So we had a big inflow in the first quarter of the year, and it becomes small inflow and even net outflow towards the middle. And then over the past 2 to 3 weeks, we have seen a resumption of buying, especially when it comes to CSI 300 and more surprisingly, CSI 1000. So I think we're trying to understand that if there's now a different approach when it comes to stabilizing the market. We understand large cap is important, but to our earlier point regarding support for small mid enterprise, especially on the technology side, CSI 1000 also contains some of those interesting names as well. So this is something that we are monitoring closely, trying to understand what is the new kind of objective in terms of market stabilization.
Yeah, well, I mean, the follow-up there is the floor in, you think, in the A-share market?
I think for the Asia market, it ultimately comes down to earnings. I think the ETF purchases certainly help erase some of those, I would say, negative spiral when it comes to the confidence challenge earlier this year. But if you look at the sector's performance, I think so far the earnings are still a little bit more challenged because in Asia market, especially when it comes to the large cap companies, they're still a lot more exposed to consumption. And so I think that is where we need a little bit more help when it comes to policy support.
I mean, we're taking a look at the rest of Asia. I'm looking at Japan. We're seeing losses of 3% on the Nikkei 225 now. I mean, they are really caught between this U.S. tech route, the yen, and the like. I mean, how are you still looking at Japanese equities for the rest of the year?
Yep. I think for us, we think about Japanese equities as in 3 parts. The first part, of course, is semiconductor because it benefited a lot from this global kind of optimism on semiconductor. And indeed, this is the segment that has received the most amount of pressure. You mentioned about some of the tech heavyweights being down quite a bit over the past few days. But if you look at the other 2 segments, which is financials and corporate governance, they actually have done relatively well. In fact, the financial side are still quite resilient over the past 1 or 2 weeks, despite all the sell-off in the broader market. So I think what this tech sell-off is forcing investors to do when it comes to Japan is become a lot more selective. Because previously you were able to deploy just buying the index to monetize the optimism in Japan. And then if you remove that semiconductor angle, all of a sudden you need to be a lot more targeted. And we still like financials and some of the corporate governance related themes.
Okay, U.S. elections, do they matter?
I think it depends on which market.
Yeah. Do they matter to you? Like, in what way does it shape strategy, if at all?
I think U.S. elections is definitely the biggest macro event for this year, for sure.
Okay.
But I think it depends on which market. I think there's a different level of preparedness for that. When it comes to China market, and again, based on the readout of the third plenum, it seems to us that the policymakers are extremely focused on national securities and self-reliance.
Okay.
And so in that sense, I think perhaps on the China side, they have a few plans that they have in mind, which they may deploy if if it becomes a lot more challenged global geopolitically. I think for the other markets like Japan, Korea, I think they may not necessarily be fully ready for some of the tariff policy, which, depending on who's the new president, may or may not introduce. So I think that's why we think there is a little bit of a divergence in terms of readiness of that when it comes to trade policies.
Jason, fantastic to see you. Let's do this again. Jason Lui, head of APAC Equity and Derivative Strategy at BNP Paribas. Just very quickly, we're doing 12 minutes into the cash market session. And yeah, there we go in Manila. So we're down 1.1%. Market was shut yesterday. It's reopening today, but it's in terms of the Philippines only. Equities are up and running, no FX, no fixed income. And yeah, as most of the capital is still at a standstill following the massive rains, of course. Still.
You were just there yesterday.
Yeah.
Flooding everywhere.
Oh, it was wild.
Yeah, we're going to have more on the fallout of Typhoon Gaemi live from Taiwan next. Of course, you're looking at pictures there from Yifan as well. And as we speak, this typhoon also heading to China as well. Plenty more ahead. This is Bloomberg. Welcome back to the China Show. Taiwan Stock Exchange will remain shut for a second day due to Typhoon Gaemi and the storm now taking aim at China after tearing through the Philippines and Taiwan this week. For more, let's bring in our Deputy Type Bureau Chief, Cindy Wang, and joining us with the latest. Obviously we've seen the pictures, but what's happening on the ground? What's the latest?
Hi, Yvonne. Yes, typhoon shut the offices and schools and Taiwan's 2.5 trillion stock market for a second day in a row. That's very unusual in Taiwan. Last time we see something like that, like a bad weather, a typhoon to shut down the Taipei and the stock market for 2 days in a row was in 2016. So that was 8 years ago. That tells you how unusual this is. But so far, we have learned that the typhoon made a landfall in northeastern part of Taiwan midnight Wednesday, and after less than 5 hours, the eye of the storm have reached out and moved to the Taiwan Strait and now heading to China. But we've seen that for the past few days, the storm has caused floodings and landslides in Philippines. So right now, China has already started to begin to shut some ferries and passengers train services, and Hong Kong may issue a monsoon warning soon. So everybody is like braced for the huge impact from the typhoon. But so far, the intensity of typhoon has been reduced here in Taiwan, even though the weather authorities have cautioned there will be strong winds and heavy rainfalls in central and southern parts of Taiwan today.
Yeah, any indication yet, or what are the specific weather signals, if that is the benchmark that authorities use to determine whether markets will reopen Friday?
Yeah, so the benchmark that the authorities use to measure whether the markets will reopen are usually just the wind, the intensity of wind, and also the rainfalls. So like last night, we have had indications before the 8 p.m. announcement came that it looks like the forecast for rainfalls and winds in northern Taiwan and even all over Taiwan would have reached the requirements to shut down the schools and offices. But judging from the indication that we have seen and the forecast we have seen right now, it looks like Taiwan may possibly cancel the land warning later tonight, the sea warning later tonight, and land warning maybe tomorrow morning. So it looks like the impact of typhoon on Taiwan has gradually reduced. And so it's very likely that the markets will reopen in Taiwan tomorrow. And we also noticed, we heard from the big chip maker like TSMC that they have made their routine precautionary measures against typhoon. And so far, there's no impact from the chip makers and other companies due to typhoon. So for tomorrow, if the markets opens, we will keep an eye on the markets, because before typhoon hit Taiwan a few days ago, TAIEX had been dropping for several days, and it's very close to correction level. And judging from TSMC's U.S. listed ADR performance overnight, it has dropped nearly 6%. Looks like it will be a very bad opening for TAIEX tomorrow, but we'll keep an eye on that.
Yeah. More turbulence to come potentially in these markets there. Cindy Wang, thank you. Our Deputy Taipei Bureau Chief joining us live from Taipei here this morning. We got plenty more ahead. This is Bloomberg. Here's some of the stories that we're following for you today. The NBA has announced new long-term TV contracts with Walt Disney, Comcast, and Amazon, spreading long-standing partner Warner Brothers. Now, the league rejected Warner's bid to match Amazon's offer of about $1.8 billion a year, setting up a potential legal battle. The new agreements are set to generate $76 billion in fees over 11 years. IBM gained after the bell after it reported a jump in bookings for its AI business. It says bookings for AI consulting and software since mid-2023 have exceeded $2 billion. Second quarter sales increased 2% to almost $16 billion, beating analyst estimates.
Right, turning now to the luxury retail sector. The latest episode of Latitude with Haslinda Amin features fashion designer and entrepreneur Vivienne Tam. As Tam celebrates 30 years in the industry, she told Has how China's influence continues to grow.
I think, China is very, very important, and I see that more and more about the Chinese customers are very much into the new ideas, exploring new concepts. It's very different than how I started before, they don't want anything Chinese, Now they're embracing the Chineseness from the government to the people, and I think that is really, really encouraging. There's a really amazing time for China at this moment, and especially customers, and they're very adapting the new world. Now you can have a Chinese style, which is so beautiful about it, embracing their own culture. Sometimes it's very challenging to use culture as an inspiration to design something for modern women and modern lifestyle. But I find it so fascinating. I'm always looking for my new collection. How can I bridge? How can I tell the story from the beginning, the inspiration, to the end, the fashion show, and then to the consumers?
And you can catch the full episode of Latitude with Haslinda Amin premiering today at 8 p.m. in Hong Kong on Bloomberg TV. You'll also be able to find it on our YouTube channel. All right, now check on the markets here right now. We continue to watch these chip stocks, which continue to be when the chips fall. Take a look at that. Renaissance, we're down 16%. In fact, that stock, I think, dropping the most in more than a decade. Their earnings were a miss as well. SK Hynix shares also sinking despite what they said, right? Well, revenue basically doubled because of this whole AI boom. Those shares now are basically exceeding those losses from the July peak to 20%. ASMPT yesterday was also an earnings story. We are seeing continued losses there for that chip maker in China, and we're down some 6%. I think we just got a downgrade from CLSA as well, I believe, this morning. And Hua Hong Semi also down some 3%. The benchmarks are looking like this, not looking good across these risk markets here today. China, at least you could say, you don't have that AI play, so you do have a bit of shelter here today. Jason Lloyd from BNP Paribas was still saying those dividend stocks, those those still are sort of the trade to stick to amidst this volatility. But there you go. Hang Seng now, you're seeing further losses there. We're down about 0.9%. Offshore markets definitely doing worse than what we're seeing onshore.
And on top of that, right, so I think this is a story that's also permeated across markets. This drop in commodity prices with iron ore continuing to see some downside today. So I'm looking at some of the steel contracts in China. Steel, rebar, aluminum, copper, all down about 1 to 2%. So really, risk is unwinding. Left side of your screens is this equity sell-off we're seeing in the region. Commodities is the middle column that you see on your screens. What isn't so clear, but something that we'll unpack later on in the second hour of the China show, is really this move we're seeing in the Japanese yen. So 0.6% is a move you don't normally see with the yen. So more on that in a moment. Plus, of course, UBS Wealth joins us in the next hour of the China show. Don't go away.
Welcome back to the China show. Here's a look at the MSCI China just a half hour into the session. We are continuing to track declines here across the board when it comes to Greater China, really joining in on this global equity rally, well, sell-off, I should call it now. And there you go. We're down 1% when it comes to offshore stocks. And even a surprise cut to that MLF, right? It was 20 basis point cut, not really doing much to change sentiment here this morning. It's really kind of that U.S. tech-led drop that's really dragging everything. The yen rally, that's really kind of dragging these carry trades as well. So certainly there's a lot on tap here today to not, to really kind of step away from these markets. Yeah, I mean, the stars are aligning in a bad way for Japan today. You have a stronger yen. And of course, I think you probably saw this on your terminal for our clients. Renaissance, which is a chip story, is down by the limit. In Japan, lower limit after a 2Q miss, and on top of that, of course, the broad rotation out of chips. So we're down 1.2 now on this, and as you can see, every single sector is down. Across the Asia Pacific, we're led by things like industrials. The miners are also doing quite badly as well. And on top of that, of course, you have sort of your Tencents of the world, and that's showing up in commercial services. We're down about 1.7% there. Right, more on the chip story now. Let's flip the boards, please. I talked about Renaissance there. SK Hynix out with earnings, not like earnings matter today. 8.3%. And of course, Yvonne was talking about ASMPT, which was an earnings story yesterday. Over 2 days, we're now down 30% on that stock. And Hua Hong Semi is also, I guess, getting sold off here, 4.2%. And it takes us into the Asia ex-China story. And, I mean, you have Korea. You don't have Taiwan today, by the way. So if Taiwan opens up tomorrow, brace for losses when you see that market open, especially with TSMC coming, if it does, of course, come online tomorrow. 2-year yield, 10-year yield, bottom of your screens, and also your Aussie 10-year yield. There we go. But apart from that, at least things are stable on S&P futures, but that's what you would expect after, what, a 2.5% drop in the cash market, which is something I don't think we've seen. Worst drop we've seen in, I think it was since December 2022. 2022, so 2 years. It was worse than the NASDAQ, really, just given that tech sell-off, as you mentioned. For more on the markets, let's bring in our MLI strategist, Mark Cranfield. We were talking about these Chinese markets, Mark, and really, even a surprise cut to the MLF didn't really change things. But any sort of signals that you're getting from that move?
Yeah, I can see what the Chinese authorities are doing here. Obviously, they're tidying up their whole interest rate profile. So by lowering the reserve repo rate earlier in the week, they were signaling to investors that pay attention, it's the short-term rates which now matter to us a lot more, which was something they've been indicating for a while, and investors have got that message. But since, obviously, they lowered the loan prime rate as well, and they've been tidying up other parts of their portfolio, and now they bring forward the MLF as well. It wasn't due to be reviewed until the middle of next month. The trouble is, it's beginning to look a bit panicky. Investors will be asking themselves, so how bad really are things in China? We've had a third plenum, which doesn't appear to have excited people with the things coming out from there. And now we've had a whole series of rate cuts a few days later. They may have been better off doing it all in one go. On the day they lowered the reserve repo, they should have come in and done all the rate cuts all at the same time, just to show that they're really just trying to adjust the mechanism to transfer money to the rest of the country so that companies get the lower rates they're supposed to get and encourage the banks to do it. Now it's beginning to look like a piecemeal system where nobody's quite sure when the next one is coming from, and is there something really bad around the corner because these rate cuts keep on coming. So the messaging is not that good, and it's going to need a lot of work from the home team in China to support the market, because the mood is not going to improve when people see all these things coming through.
Yeah, and Mark, imagine on your messaging point, imagine if the Fed cuts at its next meeting. Imagine what signal that might. That's a whole other kind of worms. We can talk about that another time. This sell-off we're seeing still in semiconductors and chips. And by the way, we're looking at the sell-off without TSMC up and running. Mark, I am tempted and itching to buy this dip. What do you suggest I do?
Well, as we were discussing earlier, one of the things which runs against it in the near term is just the timeline of when the earnings come out. Now, because we're getting a very concentrated sell-off, particularly related to semiconductors and the other big tech stocks, the big daddy of them all is NVIDIA. But it's going to be a month until NVIDIA release their earnings. So that means there's going to be uncertainty all the way through, unless we get signals coming through that NVIDIA is going to be a fantastic result and everybody can relax. It just means the uncertainty is going to last for longer. Now, we've seen plenty of times that NVIDIA has beaten forecasts and the outlook has been very good. They really need to have a fantastic report when they do come out, because otherwise the market is going to be in a complete shambles. The mood is going to be very hard to turn it around, unless, as you say, the Fed surprise with a rate cut next week, which Bill Dudley, of course, has been calling for. But so far, that's not the consensus, of course. So really, the pain is going to be drawn out for a few weeks because of the way the earnings schedule goes.
We were talking about dollar-yen earlier. I'm just wondering, how much more further can we see this strength in the yen?
Well, the positioning, the short positioning was enormous. It was as big as it's ever been before we started to get this turn in the yen. And it's unlikely that all the short positions have been squeezed out yet. They would have different thresholds because it's been building up essentially for about 18 months or so. Being short of the yen against a basket of currencies has been a pretty good trade. There's a carry trade which has worked very, very well for people over a long period. That means it would have been built up at different stages. Different people will have different thresholds. It may well be that unless dollar yen goes below 150, that's about the kind of the clearing level where people might say, okay, really this carry trade has got no more legs in it at all. We may even see that before the Bank of Japan actually hold their meeting. Then, of course, they need to deliver. They need to be as hawkish as is being sounded. But if not, the movements will continue for some time.
Well, Mark, with moves like this, and I have to caveat that this is purely speculation on my part. Should we rule out intervention taking place right now with a drop like this? We can never completely rule it out. They haven't been confirming it. They've been reluctant to talk about it. But I suspect that what we've seen this week is just purely the market itself. It's okay. Already, what you're seeing is portfolio managers are just reducing risk everywhere, and the yen was one of the biggest risks in the basket.
Mark, thank you. Mark Cranfield, our MLI strategist, joining us out of Singapore. We're taking a look at what it comes to, of course, amidst all this weakness, the Bloomberg economic survey when it comes to China also did show a bit of a division here among what the economists were expecting in terms of mini cuts. But right now, when it comes to what growth is looking like, that was also a slight revision to the downside here. So for July, the expectation is for 4.9%, so just slightly below that target for policymakers here. Retail sales, that's still the weak side of this economy. That's also been revised down to 4.5%. I take a look at credit growth. M2 growth is at 7.5%. So certainly that is continuing to see more bearishness from these economists here. But yeah, they're still thinking maybe we could still see some cuts. Maybe it's the 1-year loan prime rate. I think most still think maybe we'll see another 10 basis point cut or more. Of course, we did see that MLF cut this morning. Yeah, and I guess the reason why we're still talking about the steepener trade with lower short end yields, and I don't know if we get into the 30-year yield. Let's bring in our next guest, Yifan, who of course is with us here on set, Regional Chief Investment Officer and Head of APAC Macroeconomics at UBS Global Wealth Management. Nice to see you. Why is this A-share market
What's happening? What do you think is behind this recent decline? And mind you as well, like there are signs that the national team was already present to stabilize the market.
In our view, indeed, the GDP, actually, especially the second GDP, is much weaker than expected, dragged by the retail sales. And also for the property side, I think it's not stabilized as expected. Actually, it's continue worsening off. So I think that's added a concern of the market. And plus, for the local fiscal position, actually, it's not improving. So I think that's some of the concern, for the for the second half of growth. So that's put the sentiment as quite low. And also the national team, I think, is mainly support maybe for the A shares. But I guess the overall now with this kind of regulatory work on maybe the campaign on maybe for the fund houses and for the security houses, I think that's also lowered the sentiments of the trading. So as a whole, I think for the third plenum, of course, I think it's a big blueprint for the coming 10 years. But I think that there's no specific the short term a stimulus. So as a whole, I think that the market's sentiment now is pretty low.
So if the national teams step back a bit, you're not getting anything that's concrete from the plenum. What are some of the catalysts that you're looking for? I mean, we had a guest earlier that said why we saw markets rally, maybe the last couple months ago, was on valuation, that eventually that earnings were going to deliver.
And stimulus was coming.
And stimulus was coming. Is it going to be more stimulus? Is it going to be earnings that have to deliver for this equity rally to continue?
I think that we don't expect the stimulus. So that part, I guess, it's lose out. Even with Politburo maybe next week, I think it's more like a structure changes, structural reforms. For example, consumption tax. Actually, we have the consumption tax before, but it's shifting from the producer side to the retail side, retail end. But that's for the households may not understand. So I think in the short term could also put some of the pressure on the sentiment. So for the earnings side, actually that part we're still positive for the second quarter earnings because it's the companies will gradually announce their second quarter earnings. I think that for the individual firm side, we're still positive. So that's the reason we are still positive for some of the growth sectors in our barbell strategy.
Yeah, especially one part of the barbell is here in Hong Kong offshore. How are your conversations like with clients these days? How would you describe risk appetite?
The appetite, I think, still watch and see a sentiment because one side is concern of the growth. So that's I think probably come out this kind of MF cuts and also for the 7-day reverse repo cuts because that's quite surprising because one side the PBOC wants to hold the floor of the the 10-year Treasury rates, but on the other hand they cut the rates again. So it's a little bit confusing but I guess delivering a message. They want to probably support the economy, but we guess the fiscal policy has to play a more important role.
We've been talking about yield curve steepeners for the Treasury curve. It seems like some people are looking at sort of strategy in China as well. Do you think these policy adjustments that we're seeing in rates, does that ultimately lead to a steeper yield curve, or is there still concerns about whether that long end can actually we see yields heading higher?
For the yield curve side, because recently I think the Governor Pan also mentioned in the Lu Jiazui and wants to probably application of the interest rate corridor. So we discussed 5 to 7 years ago, and I think because in China I think the rate transmission mechanism is not sensitive enough. So even you have a short-term rate cuts or hike cut, for example, we don't have a clear policy rate, and then it's very hard to transmit to the maybe the long end of the rates. So that's the reason I think for the PBOC sometimes have to one side to cut the short-term rates. If there's no there's no response of the long end, then they have to cut the long end again, just like MLF. So in my view, and I think it's a gradual process. We don't expect for the policy rate can be very effective in the market immediately. So it takes years probably to build up a more accurate yield curve and become more effective yield curve, in my view.
Yeah, I think one area where we have seen markets, or at least the business community, respond to lower rates is in the credit market. I think we had a story, I think it was today or yesterday, Panda bond issuance, for example, has been substantially higher because rates are so low and companies are starting to borrow money. That's one part of the problem. The other part, well, one part of the solution. The other part is, do you think banks are then going to be able to then lend out more credit over the short to medium term?
Yeah, I think for the bank side, because currently for the demand is low, like for the loan demand, the credit demand is low, but now with the severe competition, I guess for the deposit side actually is like the rate is fixed, of course, but the bank always try to maybe give some more like a high rates, but now it's also prohibited by the PBOC. Right. So I think that for the like a banking side, maybe their profit margin is squeezing. So that's the reason I think the PBOC wants to hold the like a floor of the like the long-term interest rates. But overall, I think that the bank situation now it's also it's overall it's fine, but also facing a lot of problem. Not only this kind of loan problems, but also it's like the quality of its assets and also loans.
I mean, the smaller bank story. I'm not sure if you've seen that. Is that something we should watch closely?
Yeah, I think especially for this third plenum, especially mention like 3 risks: the property risk, and as for the local government bond, local government debt, and another is for the small banks. Because now small banks, I think that they are not that competitive to attract enough deposit, and their loan assets, their loan quality actually is pretty low. So that means their NPLs actually is pretty high. So I guess like they should come out some of like the packages to solve this issue.
Yifan, thank you so much. Nice to see you, Regional Chief Investment Officer, Head of APAC Macroeconomics at UBS Global Wealth Management. Okay, some breaking news now out of the Philippines, and it's unclear, although I wouldn't be surprised if it is connected to the ongoing weather there. An oil tanker carrying 1.4 million liters of oil has capsized in Manila Bay. According to the Transport Secretary Jaime Bautista, in a briefing, he said that they were able to rescue 16 out of the 17 crew. 1 is still missing. And of course, the other part of the conversation is they are looking to contain a spill. 1.4 million, of course, is quite a sizable number there.
Yep, and that death toll from this typhoon in the Philippines has already reached 20. That's according to the police with their latest update as well. We'll continue to watch those headlines crossing when it comes to the typhoon. Coming up next, we'll hear from President Biden following his decision to end his re-election campaign and endorse Vice President Kamala Harris for the top job. This is Bloomberg.
I believe my record as president, my leadership in the world, my vision for America's future, all merited a second term. But nothing can come in the way of saving our democracy. That includes personal ambition. So I've decided the best way forward is to pass the torch to a new generation.
President Biden there speaking from the Oval Office about why he dropped out of the 2024 presidential race. And let's bring in Yvonne Quinn now. She's been tracking, of course, all developments in D.C. Let's start on that Biden address. Obviously, we've seen him speak a few times already recently, and you know he seemed a bit quite sad in his tone and everything. But overall, I mean, what sort of legacy do you think he really wants to leave before he steps down in about 6 months?
Definitely somber, Yvonne. Yep, back in the White House after several days of isolation with COVID-19. And of course, now 3 of the 4 candidates have been chosen. So it's a whole different world that he's stepping back into the White House with. Heavy on the defense of democracy as a theme. And if you notice, he didn't mention his health as being a reason for his exiting the campaign at all whatsoever. He did, however, talk about some of his achievements in his first term so far. And bear in mind, there's 6 more months to go. And his tone said that he intended basically to serve out his term fully. He talked about the economy, talked about an intention to improve growth over the next 6 months. He talked about racial wealth gaps narrowing, America leading the world in chips and science and innovation, some of his achievements when it comes to lowering prescription drug costs. And then he talked about border crossings being lower today than when the previous administration left office. So he was passing the baton, as he said, to a younger generation, but at the same time, he was hitting back at some of those complaints that Republicans can levy and have levied at Kamala Harris, the new person at the top of the ticket.
Vonnie, also in Washington, the Israeli Prime Minister is still in town, of course. Get us up to speed on that speech at Congress.
Yes, it was definitely a highly anticipated speech, and many Congress people, Democrats in particular, didn't even attend. Of course, there's a whole array, a whole plethora of opinions on how the war on Hamas is going. Not least of all within the White House right now, and those who would be in the White House in 2025. We don't fully know how Kamala Harris or Donald Trump would actually treat Netanyahu. We know that both have little bones to pick with Netanyahu. Kamala Harris has been a lot stronger rhetoric-wise on Netanyahu and Israel and the way it's conducting the war and the humanitarian crisis in Gaza, and Donald Trump has a little personal beef with Netanyahu for congratulating Biden when he won the vote last time. So yes, we had this speech today. There was a lot of protests in Washington, D.C. Tomorrow we have President Biden meeting with Prime Minister Netanyahu at 1 p.m., then meeting with families of American hostages, and then later on, 4:30, meeting with Kamala Harris, and on Friday he goes to Mar-a-Lago. So Netanyahu definitely covering his bases. And as for foreign policy, we should be getting a little bit more to know Kamala Harris throughout this process. We know that, for example, Anthony Blinken, current Secretary of State, has come out and praised her as a leading voice who asked penetrating questions in Situation Room deliberations. So definitely already trying to beef up her foreign policy credentials.
Yeah, and what do we know about a debate between Trump and Harris now? I mean, it seems like he was Trump was pretty set on, really trying to win over Biden. But, how is he looking at a potential debate with Harris now?
Yes, it's quite clear that he obviously likes the attention on him, and when it isn't on him, he sort of goes looking for it, particularly with this new candidate and a reset now. And, it wasn't exactly how he wanted things to go. His supporters wanted Joe Biden to stay in the race. So there was already one debate set for September 10th. That was going to be hosted by ABC. We'll see if that goes ahead. Then the president talked about it on a call with reporters and said that he wasn't thrilled about the ABC network hosting it, that he wouldn't mind Fox hosting it. So, of course, we now have a proposal from Fox for a second debate September 17th. And NBC is now also looking for a debate. The president, of course, told reporters he'd be quite happy to debate Kamala Harris more than once. So we are waiting on comments from the Harris campaign and from their team. But it's quite clear that there's going to be a lot of conversation and perhaps many debates between now and then. And there's a lot of work that Kamala Harris has to do as well to beef up her talking points on a lot more than just what she has been talking about. Economic-wise, for example, we know that there are Wall Streeters gathering to try and gather some talking points on the economy to pitch to potential donors as well.
Absolutely. The game is different now, isn't it? Vonnie, thank you so much. Vonnie Quinn in Washington. For our Bloomberg clients, you can keep track of the upcoming U.S. elections by going to WSLElection.gov. Of course, takes you to the sort of homepage on the terminal. There's a lot of data there. We put some of the data on a chart for you. Trump versus Harris. The second panel, bottom of your screens, is effectively the spread between the two. So check that out, of course. Plenty more ahead. This is Bloomberg.
Checking out markets here right now. We're taking a look at when it comes to some of the banks here this morning. Obviously, when it comes to that surprise, the MLF cut by about 20 basis points. So it's a bit of a surprise. There is a bigger than expected cut than most and earlier than expected from most economists as well. Also, deposit rates were also cut in some of the major banks. Yeah. But you are still seeing the likes of Merchants Bank down some 3% here today. Property also in focus. Not a whole lot of movement there. But commodities is what we're watching out for. This free fall that we're seeing across base metals here. The like iron ore falling for 8 straight days. The Aussie dollar certainly is falling in tandem as well. We're down for a 9th straight day for that currency, the longest losing streak we've seen in more than 4 years. 11:29 a.m. in Tokyo. Japanese markets heading to that lunch break, and oof, do they need it right now to really kind of digest what's been going on. 2% losses for the topics as well as the Nikkei 225. We talked about the chip sector really kind of playing a part of it, given this tech sell-off in the U.S. has basically gone global. But yes, dollar-yen, we're at 152 levels now. So we're set for the best month since 2022 for the yen. So we continue to see it hit the levels that we've seen back in May. But certainly there's growing consensus now that maybe the BOJ is going to do something next week, Dave.
Yeah. Or I'm wondering if they see this and go, okay, maybe we don't need to do anything next week. Well,
who knows?
Well, they better. Otherwise, we'd be back at 162.
Yeah.
Think about it that way. Also moving in Japan, in case you missed it, so the drag from, I think we were down 5-6% on the SOX index overnight. We're seeing that play out, as you can see here. Renaissance is down the most in about 12 years. So on top of the profit miss, there's also the chip story and a rotation out of that as well. Disco down 7%, Hitachi's down 7-8%. So it's not a pretty day as far as chips go. In fact, on the chip story, there are two major ways to play that in Asia, right? There's the
TSMC.
There's the TSMC, or there's the Korea path. And investors are actually searching for ways to navigate this AI trade, and they're now turning the sights away from Taiwan and maybe towards South Korea. You know, TSMC is, and look at its longer-term chart, is still outperforming its peers, Samsung and SK Hynix, although I would imagine this thing narrows, of course, when Taiwan opens up and TSMC plays some cash in. But in any case, of course, the big picture is Korean chip makers are becoming more appealing as TSMC becomes even more crowded. John Chang is with us out of Singapore. He's our Asia stocks reporter. John, yeah, what are the risks that analysts see now with this long TSMC trade?
So we definitely see TSMC sort of becoming a crowded trade, and the main reason is being a lot of the portfolios have mandates stating that the holdings for a single stock cannot exceed 10%, and given TSMC's strong rally this year, a lot of portfolios are already reaching that limit, and meaning fund managers will have to look for other ways to sort of have that AI exposure with smaller stocks in the sector. And naturally for them, a way to play this would be to go for Korea, because Samsung and SK Hynix, their weighting is not as heavy as TSMC is in the TAIEX benchmark index, and also valuations are looking more attractive for Korea. Samsung and SK Hynix is trading at around 10 times for earnings ratio versus about 20 times for TSMC. So from a relative valuation point of view, definitely the Korean names are looking a lot more attractive than TSMC is currently.
Yeah, so that is sort of the appeal. I mean, is this getting more of a consensus sort of view? I mean, what? Tell us a little bit more about the divergence between Korea and Taiwan in terms of these AI trades.
So it looks like a lot of funds are indeed underway in Taiwan. And if we look at the chip names themselves, there's definitely a differentiation between Taiwan and Korea. TSMC is a foundry market leader. In Korea, you get more memory chip makers with Samsung and SK Hynix. SK Hynix is already supplying most of NVIDIA's high bandwidth memory chips, but Samsung, we are seeing this company fast catching up with SK Hynix, is venturing into the HBM business as well recently. So there's definitely a sort of catch-up play element in there. And also Korea, we see this broader initiative to boost valuations in the stock market. We see companies striving to increase their dividend payouts and do more share buybacks. So this is a broader tailwind for the Korean market as well. So indeed, a lot of fund managers are overweight in Korea and underweight in Taiwan currently.
John Chang, thank you so much. John Chang in Singapore for us there on this rotation out of TSMC into the likes of South Korea, where SK Hynix, of course, is giving us that sort of anchor today on those earnings. Although, I mean, on a day like today, when you see what's happening with price, the earnings actually matter. We're down 8%, and it's as if the company did not report revenue that actually more than doubled. Let's bring in our executive editor for Asia Technology, Peter Elstrom, joins us now out of Tokyo. Peter, take us through what the company reported.
Yeah, it wasn't supposed to work out this way. SK Hynix reported its earnings this morning, and they were very strong. As you alluded to, revenue more than doubled. Their operating profit was way up, too. So it was a pretty positive report from the company. They exceeded analyst expectations both on the top line and on the bottom line. And yet, as you allude to, the shares are down 8% today. That's really carryover from what we saw in the U.S. trading session today, where investors are getting more skittish about the AI investments, especially the AI valuations that we've seen in the tech sector with NVIDIA surging so much. You know, it's gone up to $3 trillion. Hynix has also been a big beneficiary of that increase in the valuation for some of these AI stocks. Hynix makes HBM chips, high bandwidth memory chips that are paired with NVIDIA's accelerators in packages that customers like Microsoft and Google have been buying up in droves to be able to invest in these AI models. The concerns now, though, are that a lot of these AI services are not generating the kind of revenue, the kind of expectations that had been expected earlier. They think that perhaps some of the investments have gotten ahead of themselves. Investors are a little bit concerned that unless these customers begin to generate significant revenue, they're not going to continue to make these very big investments in the kinds of chips that NVIDIA and SK Hynix actually make at this point. So that's the uncertainty that's hitting. It hit NVIDIA overnight with their decline of almost 7%, and now it's hitting SK Hynix here in the Asia trading day.
Yeah, I'm just wondering then, what do we look at overall? I mean, it's hard to go against this sort of current that we're seeing with, you know, U.S. big tech that's selling off massively. But at least can they still maintain their leadership, SK Hynix, to other rivals like Samsung?
Yeah, to put a little context around the pullback today, the shares are down about 8%, but SK Hynix's stock has been up 47% this year through yesterday's close. So it's giving up a little bit of those gains at this point. Hynix is way ahead in terms of this high bandwidth memory that is used with NVIDIA's accelerators. They're on HBM generation, the 3E generation right now. They talked today on their conference call about how they're going to move from 8-layer HBM chips to 12-layer HBM chips. That's building up their lead even more than it has been against rivals like Samsung and Micron in particular. Both Samsung and Micron are trying to take some market share here against SK Hynix, but SK Hynix, which is a little bit of a lower profile company, hasn't had the kind of spotlight that Samsung has had certainly in the past, has jumped out ahead, and it sounds like they're going to try to hit the accelerator right now with some of these more advanced HBM chips to be able to build up their lead even as they're facing more competition in this sector.
Peter, thank you. Peter Elstrom there joining us there on SK Hynix, our executive editor for Asia Technology, joining us from Tokyo. We got plenty more ahead. This is Bloomberg. All right, we've been checking what this Treasury board is looking like here right now. And yes, that movement that you see in the 2-year, a lot to do with what we heard from Bill Dudley in some ways here. In his latest Bloomberg opinion piece, he mentioned, you know what, I changed my mind. I used to be in that higher for longer camp, and now I think the Fed needs to cut, and not just in September, but next week in July. He's talking about the slowness that they're seeing in the economy, whether it's in the labor market as well. And he says waiting until September to cut might actually raise the risk of a recession here right now. And that's why we did see a little bit of that steepening of the curve sharply after those comments. Meanwhile, former U.S. Treasury Secretary Larry Summers is pushing back against calls for the Fed to start cutting rates next week. He told Bloomberg that policymakers should wait a little longer.
On current facts, I would not cut rates next week. I think we need to be very careful about making the move, especially since when the Fed starts to cut rates, there will inevitably be an expectation of some cascade of rate cuts. It's certainly true that as the news has come in over the last several months, it's tended to be on the low inflation and on the soft economy side. And so markets have now adjusted to expect a rate cut in September. I had thought that that was a possibility, but not a probability. On current facts, I'd certainly regard it as a probability, both in terms of what should happen and what will happen. But I think it's the better part of prudence, particularly in so unsettled an environment where the deficit figures are coming in a very problematic way. I think it's the better part of prudence for the Fed to wait a little longer before cutting rates.
As you say, Larry, it's such an unsettled environment right now, and part of that unsettlement is what happens in November, which of these very different economic approaches we have in the White House. Give us a sense, from the Fed's point of view, do they try to take that into account, or do they sort of ignore it? Ignoring it seems to be like putting your head in the sand.
I think the Fed needs to consider all the factors in the environment, whether it's the fiscal policy, whether it's business confidence. But obviously, the Fed needs to stay out of politics and not be trying to tilt in either direction. So I'd expect the Fed will be watching the markets, and the markets will be watching all the political uncertainties. And so in those ways, the political uncertainties will factor into the Fed's decision making. But certainly I don't think the Fed should be explicitly getting involved in politics. I do think that there is an underestimation in the political clash generally, but a far more severe underestimation on the Republican side of the fiscal policy risks in the current moment, where the Republicans are talking all about deficit increasing measures, whether it's on the defense spending side or on the tax cutting side, with nothing really pointing towards any kind of control, and at the same time making it harder for the country to sell its debt by trashing the currency. I think they are setting up the United States for a kind of Liz Truss moment. The Democrats are not as focused in this political year on the fiscal challenge as I suspect a new administration may have to be. But at least when fires are burning, they are not throwing gasoline. And that's a very important distinction.
And that was Larry Summers, former U.S. Treasury Secretary, speaking with, of course, our colleague David Weston. Now, it's time for your China brief and a look at really what's making headlines in national newspapers here. So Shanghai Securities News, we'll start with this, is reporting an increase in cancellations of IPOs on the mainland. So it says about 339 companies have scrapped their listing applications so far this year, and that's really due to stricter rules at stock exchanges and also weaker earnings. Some firms that have terminated those plans are reportedly eyeing mergers instead. Meanwhile, the China Securities Journal says, the smart driving sector is drawing more interest from private equity investors. A fund manager told the paper that driverless taxis could one day become a $1 trillion market. Sounds like Kathy Wood, actually. As consumers travel, of course, and habits change. Now, the report says investors see potential following the introduction, of course, of robo-taxis under Baidu's Apollo platform.
And Chinese state media is touting Beijing's role in brokering a deal between different Palestinian factions. The reporting focuses on international response to the so-called Beijing Declaration, which seeks to form a Palestinian unity government after the war. Media outlets say the deal affirms China's role as a, quote, peacemaker. For more, we're joined by our China correspondent, Min Min Lo now. And China is really kind of playing up this diplomatic win on the Palestine issue here, just as we saw the Israeli Prime Minister Benjamin Netanyahu in Congress with a pretty defiant speech.
Yeah, I mean, Chinese state-linked media is really having a field day just playing up this success, what they're calling the historic Beijing declaration of peace among these 14 factions, including between Hamas and Fatah. And that is no easy feat given the long-standing bitter enmity between these groups. I mean, there have been attempts to do this in the past that have failed. And of course, this current peace deal is untested at the moment, but it does go quite far in agreeing to form this interim national reconciliation government on a pro-Gaza territory. Of course, that territory is still in question at this moment. After you heard Israel saying they are vowing to eradicate Hamas, but still, there's no doubt it's a win for Beijing. It showcases its growing influence in the Middle East after they had brokered that peace deal as well between Saudi Arabia and Iran last year. And of course, there are analysts who say that, there is this lack of international mediation, this kind of sidelining of the Palestinian issue that gave an opening to China, which has been that country that has been calling for this two-state solution. But at the same time, there are obstacles as well from the US, UK, Israel. These are countries that are unlikely to support any form of unity government that has Hamas as a part of it. And of course, state-linked media is just playing up China as this responsible global major player who is an advocate for peace and who has the results to show for it.
Yeah, well, speaking of, Wang Yi was speaking, I believe, in Guangzhou with the Ukraine's foreign minister. How did that conversation go?
Yes, so the Ukrainian foreign minister described the talks as being very concentrated and deep. It went on for more than 3 hours, but the long and short of it is that Ukraine still insists that it's not going to engage with Russia unless its territorial sovereignty is fully respected. And that is a moot point given that Putin has said he's not willing to end this war unless Ukraine cedes those occupied territories to Russia and Ukraine ends its ambition on joining NATO. So China's foreign ministry is saying that the conditions are not ripe for peace talks. That's just a nicer way of saying that they can't broker a ceasefire at this point. And clearly, Beijing has repeatedly been saying that they support a political end to this solution. And remember that peace summit in Switzerland where Russia was not invited to, Beijing refused to participate because they said both Russia and Ukraine must be at the table, and they've been advocating for an alternate peace conference. And it looks like Kyiv is open to that. They have said that they're willing to hold a second summit later this year. They want it to be held and hosted by a country in the global south. They want Russia to be a part of it as well. So that's something to look out for. But of course, this matter has taken increased urgency as well because a potential Trump presidency could mean a cut down in U.S. commitment to support Ukraine in its war.
Min, thank you so much. Min Lo there, our China correspondent. Right, plenty more ahead. We'll get you guys an update of the sorry state of these markets this Thursday. This is Bloomberg. Welcome back to the China Show. The latest episode of Latitude with Haslinda Aman features fashion designer and entrepreneur Vivienne Tam. And as Tam celebrates 30 years in the industry, she told Has how China's influence continues to grow.
I think, China is very, very important, and I see that more and more about the Chinese customers are very much into the new ideas, exploring new concepts. It's very different than how I started before, they don't want anything Chinese, Now they're embracing the Chineseness from the government to the people, and I think that is really, really encouraging. There's a really amazing time for China at this moment, and especially customers, and they're very adapting the new world. Now you can have a Chinese style, which is so beautiful about it, embracing their own culture. Sometimes it's very challenging to use culture as an inspiration to design something for modern women and modern lifestyle. But I find it so fascinating. I'm always looking for my new collection. How can I bridge? How can I tell the story from the beginning, the inspiration, to the end, the fashion show, and then to the consumers?
And of course, you can catch a full episode of Latitude with Haslinda Aman premiering today at 8 p.m. in Hong Kong on Bloomberg Television. You'll also be able to find out on our YouTube channel as well and watch it there. Yeah, we talk about the China slowdown. Certainly, we've seen it across earnings and the like, but really you're starting to see it in some of these profit warnings from some of these European companies as well, especially in the luxury sector, right? So LVMH was just the latest one to chime in on this. But we heard from Swatch, I think it was last week, Hugo Boss really talking about it. And you're starting to see that really reflected in these markets where, these European stocks with high exposure to China are really lagging behind. Yeah, I think we're almost flat on the year of the Goldman benchmark, which is the one in white. Europe is about 7% up year to date. Yeah, I mean, it is getting real, right? And, this is all, and this is, to note, right, this is only where, I would imagine this is an understated number because this is only where the companies disclose that actual exposure to China. It doesn't even include, the lack of tourists that have gone abroad that you're shopping in Paris, for example, that don't count actually as China buys, that aren't present in the market. But yes, I mean, the slowdown is really starting to bite these consumer-facing names. And even the billionaires. Oh yeah, poor. Okay, well, poor them. Poor them. Well, we're talking about LVMH, right? But Bernard Arnault, I mean, his net worth has basically plunged. Actually by more than anyone else's on the Bloomberg Billionaires Index this year. So we're talking about a fortune drop by $20 billion during that period to now he's worth $187 billion. That's according to, of course, our rankings there. Also, when you talk about Nongfu Spring, the founder there, I mean, obviously there's been a lot of talk about that stock. And yesterday was really about this whole concerns about price wars now in bottled water that really sent the stock, heading lower there. And so now, him too, Zhang Shanshan, is now talking about potentially losing his crown as the richest man in China. Yeah, it's the same story, right? The consumption, the weak consumption story. Yeah. It's impacting everything from expensive champagne to bottled water. Bottled water. Yeah, I mean, in some cases, some champagne brands do taste like bottled water, but that's a separate conversation. But yeah, I mean, and you really see this impact at Richco. I think we were showing that on our screens earlier. I'm not sure if we still have that. If you can get that up again. If not, it's on Richco for our Bloomberg clients. The top three in China that have seen the biggest declines. So the top richest in China, as you can see, Zhang Shanshan is still the top, but he's really seen his wealth come down substantially. Water down, as they say. Oh. Pardon the pun. But yeah, PDD is just right below him, right, Colin Huang. So that's narrowing down a little bit as well. Yeah, so certainly, yes, we're watching that. We're watching markets here right now too, Dave. Yeah, and Jensen Huang has also seen his wealth been pivoted down substantially. Elon Musk this week? Yeah. Elon Musk lost, I think, the most. There's a biggest single-day drop. Yeah. 21 billion? Yeah. Overnight, right? This tech sell-off that we're seeing, and that takes us into the chip story too. The broader tech decline. So NVIDIA was down substantially, Tesla was down substantially, and we're seeing that play out across your related names in the Asia-Pacific here. There we go. Yeah, it's not looking good. It's looking for the yen, though. Take a look at what's been going on with this yen strength, whether how you kind of slice and dice it. Those yen crosses are still seeing gains with the yen. 152 levels here right now. This is Bloomberg.